making $509 trading Netflix. So what's going on, guys? We're back. This is filming. I'm filming from the same exact day that I filmed the last recap because the trade that I was talking about in that video has been closed. So let's get into it. I realized I was also filming that video while exporting, I think, the other video, and it completely botched. Like it was just so laggy. So I hope we're good here, but this Mac can't handle too much. I am going to be, I think, in the next year or so looking in the ballpark or looking, I'm in business for something upgrade wise. So if you ever have any recommendations, I will pay for it. I'll save up money and pay for it. I want a beast. I want a computer that is going to last me for like 10 years. That is going to be able to handle like 75 things at the same time. Like I want it all. Okay. And I don't want to hear it huffing and puffing. That's the thing that I'm looking for next. Any recommendations, let me know. But Netflix, let's dive into it. So here's the recap. Boom, busting through the top of my range here. I'll talk about why I have my target where I have my target, and we'll dive into all that. But essentially, it was kind of just a perfect setup, clean. Really, the way I like to play the game is, earnings gap ups like this or gap downs. You got to give them a couple days, at least maybe a week or two. In the case of Netflix, they had earnings back on January 21st. Big gap up on the 22nd. And then this trade, I did not enter till the February 4th. So I gave it like a good week and a half, 2 weeks. So it had time for it to consolidate. And the great news about it too was that it just showed me strength, putting higher lows into this area, broke that wedge or broke that resistance. Also happens to be an all-time high. So when you have an all-time high, you go, okay, well then now what do you do? How do you target? And what I like to do is I like to draw my box or draw my trade box, which this thing right here. And then what I'll do is I will look for at least a 1.5 to 1. So if it's not a 1.5 to 1, I'm not taking it. It's not worth it to me. And then I'll look for like the next psychological level. And so the case of Netflix, 1050, so 1050 was kind of like the next psychological level that made sense to me. So I targeted right there, or just about that area, and it ended up being about a 1.7 to 1 risk reward. Now, I did move my stop loss to break even yesterday as we got pretty close to our target. And I usually do that once we get more than halfway through to our target. But looking back, one of the things that I think about is, technically speaking, I could have done that right here on this candle because we were more than halfway there at one point, but I didn't. And so if I had, then I would have gotten stopped out break even right here. However, as I look at it now, like that was a decision that I just didn't make at the time, and it worked out. Sometimes you make the decisions and it won't work out. Like, I don't know. I mean, there's so many variables in this that but the other piece that I was going to say is the reason why subconsciously, I don't think I necessarily thought about this while in the trade, but subconsciously, the reason why was I'm sitting in this thing and I know that okay, my risk is about 2.75% to make about 4.75% roughly. And I know that Netflix can do that in a day, either up or down, can easily do that in a day. It's done it before. It could totally do it. So I need to give it some breathing room, because if it does back test or, give us a push down that has a lower wick, I mean, it could do it. It's not that, this is not that insane. Whereas if you have a bigger, 25% target to the upside and 10% downside, now you've got more room. You're giving it room. This in this case is pretty small. I'm not giving it a ton of room. So that's the takeaway. Now not looking back, but I guess looking forward or looking at it right now in the present, we can see that it's obviously breaking through the target. And I filmed the recap before, which the video was shit. But when I filmed it before, we were just hitting the target and stuff. Actually, we kind of hit the target and then kind of pulled back. I can go to the 5 minute. You can see it was kind of right in here when I filmed it before. We hit the target and then kind of fell off. But we ended up breaking through, and now you're well, you missed out on some gains. And that's the piece that yes, but the way that I've been structuring the system is this way. I currently do not have a scaling out approach based off a trailing stop loss or something like that. I could, but also I always go through the same argument or the same, thing in my head that you're going to end up there may be opportunity there, and that's worth back testing, which, subtle plug, by the way, TradeZella just released their back testing 2.0, which is apparently awesome. I haven't tried it, but what I'm going to now do, which now it gets me thinking, and I think for this year we'll start doing that, just because like I don't have that many trades so far this year. I can start with this year, but I can kind of look at my trades, or I can kind of go back and see out of winners and losers, you know, what trades we have that could have made us a lot more money. Let's say we had some sort of scaling out approach, and then how much would that either have made me more or less, or hurt me? Because there's inevitably times where a couple of trades, by the way, to end last year and to beginning of this year, that for some reason, somehow I just happened to get very close to the top of the move. And then we had a big reversal back down, and then eventually came back up. Like on Apple, I had a trade on Apple where back when I was in Hawaii, and it was like December, I got in on the break above like this level right here. And we had a huge move. Like December was great. Awesome. But then like I had a target, I kid you not, you go back to the recap, I had a target at 260. We literally hit like 260.25. I didn't know. And then we completely unraveled. If I had put my stop loss at break even, that would have gotten hit within a couple of days. And then eventually it's kind of bouncing back up, building higher lows, whatever. Who cares? The overall pattern is still strong, whatever. Yeah. But like in that scenario, taking my entire position off at that spot that I had targeted worked really well. But then there's going to be scenarios where, you know, like maybe Netflix, I don't know, maybe Netflix ends up doing that in the next couple of weeks. And maybe Netflix goes to 1,100 or more. And now I'm going to miss out on this next, you know, from my target, this additional, I don't know, what is that going to be? Like 5% move that I could have made on the trade. Now, obviously, with a portion of my position, not the entire thing, but now you go from making, for example, 509 to now maybe squeaking out $600 or $700 on this trade based off the two trades or based off the current sizing that I have, whereas this trade makes me 509. You know, so like there is obviously something to think about there, and it's something that I will think about. And so now that I'm trading a lot less because I'm taking more swings, I really like that approach, A. But now, B, it's going to make it so much easier to go back and track these and say, okay, let's see, like if we had a scaling out approach, would it be useful? Not going to just start just implementing it. Like let's gather the data. And if the data tells me you would make an extra 2% on your account, you know, this year, if you had utilized this approach, and then I would have to build out the approach or see the data and then build the approach from there. If this, do this, you know, at this point, take off X%, then take off X, like make it very, very, you know, simple, and make it like a structure, make it something that I don't have to like think too much about. And then make the, like, if that's the case, then I will do it. Like if it's going to make 2% more on my account, might not sound like a lot to people who are like looking at options saying 500%. I don't give a fuck. To me, it's like I want a consistent system, and then I'll just scale the account by either getting, you know, larger prop firms or building your own capital, and you can just scale that over time. And who cares if I make 5? I don't give a fuck if my trading strategy made me 5%, okay, 5% a year. I literally do not give a fucking shit how low the percentage is. If it is making money and it can be scaled and replicated, and it can and I can keep doing it, why would I not keep doing it? Like that's the whole thing. So roll with it. It doesn't need to be 1,000%. It doesn't need to be 50. It doesn't need to be 50%. It could be fucking 10. It could be 5. It could be 2 for all I care. As I build my account, it made money. Like that's all that matters. So that's where my eyes are going next. That's the recap. I will leave a link to TradeZella 10% off with TC10 as the code in the video description box, like always, if you want to check it out. And if you want to use the backtesting feature, I think I haven't used it yet. So I'm going to see over the coming weeks, but I think it's a very promising feature. I'll see you guys in the next one. Enjoy your weekend. Peace.